On Monday, I prepare my investor group for a volatile market this week as there's CPI data released on Tuesday, and on Wednesday, today, the Federal Reserve would be announcing a new interest rate hike. And also at the end of the week on Friday, it will be the monthly option contract expiry. So we can expect a pretty volatile week in the market. Yesterday, the market rallied on the release of the latest CPI data or inflation indicator, only to come back down to the ground at the end of the day. And today, on the announcement of the new interest rate hike, the market went the other way. Although we're not trying to predict whichever way the market is heading, but being a long-term investor, we always want to do our best in terms of managing our own expectation. And here's some updates from today's interest rate hike and what it means to us and what we should do as long-term value investor. Moments before Federal Reserve Chairman Powell stepping on the podium, the market's starting to nosedive. Major indices pretty much dropping like rocks vertically. And when he started to speak, the market pretty much paused and tried to listen what he has to say, even though it's pretty much expected, and then continued to drop. When the whole press conference, including the Q&A session, was all over, the market had the opportunity to digest the information a little bit and then recover a little bit. But overall, it was still down from the day's high. After very aggressive interest rate hike with 75 basis points each in the last 4 sessions, today, the Federal Reserve raised another 50 basis points or 0.5%, which is the base case expected by the markets. The chairman welcomed the reduction in inflation rates for October and November. However, it remained high, and we are still some distance away from the target inflation rates of 2%. As he lay out here, and he doesn't see it coming down to that target rates until late 2024 or 2025. On the labor market, the chairman described it as remain out of balance and extremely tight. And the unemployment rates remain at 50 years low and the wages are still high. The chairman does expect unemployment rates will rise to 4.6% the next 2 years. And in terms of the housing market, activities is significantly down due to the higher interest rates. And on GDP growth, he expects the GDP will slow down to 0.5% for this year and also next year, and it will start to grow again slowly in 2024. That means there's still a chance for recession next year. The overall tone and the choice of words by the chairman is generally more dovish than in the last meeting, and it signals an ongoing interest rate hike while at a slower pace. The possibility of 25 basis points increase in the next meeting in February is possible. Meanwhile, the Fed will continue to reduce their balance sheet, selling assets back to the market. This week is not over yet. The monthly option contracts will expire this Friday, December 16th. There's going to be a lot of market activity and volatility is likely to continue. And this is not in any way to predict the market. It is just how we manage expectation as prudent investors, which I will cover in more details in my value investing program. While it sounds like a lot of markets or Wall Street mumbles jumbles, what does it really mean to us and what should we do as value investors? Well, given the ongoing high interest and monetary policy, it means that the stock market will remain under pressure and bearish. This presents tremendous opportunities to us as the stock prices have came down to a more reasonable level. In fact, currently the S&P 500 P ratio has come down significantly to about 17, which is similar level to the past 10 years. However, in the past 10 years, the Fed rate was at about 0% in 5 of the 10 years. Compared to today, we're at almost 4% and heading to 5%. The Treasury notes was averaged at about 2.1% in the past 10 years, and today it ranged between 3.5% to over 4%. So there's room for the P ratio to even come down more, which means opportunities to us. In fact, the share price of some great companies with wonderful businesses has already dropped down to the discount level for their value. So if you're long-term and value investors, sharpen up your pencil, be prepared. There are plenty of opportunities being presented to us right now and likely in the next couple of quarters into 2023. as well. You're welcome to join my Value Investing Facebook group where I would regularly post and share information as well as updates, providing guidance and inspiration in the journey of value investing. Also, my value investing program will prepare you and help you in finding these opportunities and guide you through the entire process with practice on real-time trading platform. This year, one member from my investor group outperformed the market, achieved a 36% gain in 1 year and over 200% gain in 2 years. In fact, I will be hosting a 1-hour live workshop to showcase her portfolio and to explain how it was achieved. Also, I will be giving away a simple 4-step process as well as the checklist, the same one that she used to achieve this. So stay tuned. The workshop will be on Saturday, January 7th. The detail and link will be posted in my Value Investing Facebook group. If you enjoyed this video, please like, subscribe, and share with others. Also, check out my Value Investing Facebook group where I regularly share more information and updates with my inner circle of investors. I include the link below. Let's invest safely and wisely. Until next time, take care.